Welcome to Winning Wall Street's Money. Help support my channel. We need to get to 1,000 subscribers pretty much as soon as possible. So then I go live streaming because YouTube policy, they won't let me go live until I have 1,000 subscribers. Thank you to all the folks out there that have subscribed to my YouTube channel. If you have not yet, please take this moment now with helping me. Click subscribe. Next, click the bell. And next, click all. This helps you receive a notification when I post my next videos. Plus, click the thumbs up button and every time you watch my videos. If you got value from this video, if this was helpful, then please consider sharing a small monetary donation to my channel by going below and clicking on either my Patreon or PayPal links. If you join my Patreon page, then you'll get early access to these videos 24 hours before they're posted on the YouTube and lots more. If you prefer just leaving a small tip, clicking on PayPal. Either way, then you get that warm sense of satisfaction years down the line knowing that you helped me become a successful YouTuber. Sunday, November 21st, 2:48 p.m. New York time. U.S. futures will be opening in a couple of hours to start the new week. We'll look at three time frames. From the far right, be the weekly, the middle will be the daily, and the far left would be the 4-hour intraday. Start off looking at the US dollar index. The trend is up on the weekly. Big moves, huge trading ranges the past 2 weeks. Look at those candles. Yep. Making new highs for year to date. Strong like bull. Dollar is strong. Looking here on the daily, past few days, yep, made that high, that red candle, bearish pin bar, and then Friday did a retracement of it, failed to make a new high. It's in a consolidation phase. Again, a note, it failed to take out that high. So I drew a Fibonacci. That's what you see the study is here on the side, and going to be looking for a potential retracement to some of these levels. If it doesn't occur and just out the bat continues going higher without taking out the low of Friday, daily candle, continues going higher, then this Fibonacci study at this price level is insignificant, and I'll be removing it. If the dollar does pull back lower, watch the commodities. Some of them would expect to be going higher. Maybe the metals, maybe the energies, maybe the agricultural. So those could be bullish day trades or swing trades for the week. Yeah, but typically the US dollar is bullish bias over these holidays as well too, as history shows, but so many things could change. Okay, intraday 4-hour. Let's put this on the 5-day instead of the 10-day. Same thing. Intraday, we had that event occur. Again, these lighter areas are overnight in the darker areas here were primary areas during the daytime. So bearish pin bar here on the green candle that retested there and failed to go higher. But we also had a bullish pin bar there at that big midpoint of that candle. Yep. So that's tricky there. But we definitely see that price level 96 is holding. It's above 96. So maybe we'll run up to that 96.25 and test it. That's what to look for in the dollar. Now let's look at the 30-year bonds. Set them up. Okay, starting here on the weekly. The trend is still up here on the weekly. And again, we made an interesting candle on the weekly candle. Huge tail. Closing just shy of closing inside that weekly candle there. So that's interesting. It's not as strong as one would like because we didn't close Friday. Sorry, we didn't close on the weekly candle back inside that body. We closed below it. So that's it. We may just had a failure and we may roll over, go lower again. So let me just take away this purple trend line. We'll leave it there. See what happens. Looking here on the daily, same thing on the daily. Past 3 days, we did a retracement. Again, the trend was down. I'll keep this purple line up because on the daily it's still trending up. But we're doing a retracement of this prior trend down. and we rejected closing above 50%. We did close above that 0.382, but because we failed to close above that fib level of 50, if we start trending down, we may have a trend down equal the length from there to there. Yep, so that could be an opportunity to watch to look for bearish trades this week or day trade. And the intraday 4 hours, same thing. It's an acceleration phase rejecting that 162. So right now that 162 is a supply zone of sellers. On to the next product. S&P 500. So the weekly on the far right and the daily, we'll use the SPX, the cash index, and on the far right, up far left, we'll use the futures. So for the weekly, yep, made a higher high, higher low, small consolidation up here, still showing bullish bias. Let's look at lower highs. The trend is up there, but again, resistance around that 4,700 and 4718.50 is a supplier or sellers. Or maybe we're pushed to go higher through there. Look on the daily. Yep, on the daily chart, look what happened Friday. We closed back inside Thursday's range and even below the close of Thursday. That's not good. And on the futures 4 hour, the last 4 hour candle was inside candle and went below the 4,700. So maybe we'll have a pullback retracement to enter bullish positions for this holiday week. Let's go on to the next. Back to the same colors. Now we're looking at the commodities, crude oil. If you're traveling, good luck on getting a fair price. You're gonna pay market price, whatever the diesel, gasoline, propane, yeah, natural gas. So the current trend is down on the weekly. Strong impulse move down, rejecting 75. So obviously buyers stepped in here and holding it, defending it, $75. Still pretty darn high. Now looking at the daily, notice that, wow, midpoint. So right here, this consolidation, gray area, consolidation, midpoint of that is almost actually a little bit below $75. So that's an interesting price. It's rejecting going below. That's a demand zone buyer. So that might be the opportunity to buy bullish positions. Yep, see what happens. And then the retracement, be interesting if it's going to go above at this midpoint. Could be around the $70 in the range. Okay, looking at the intraday 4 hour, the last 4 hour, small tiny trading range, inside candle. We know those could be reversals. Yep, and these prior to red candles, huge tails on the bottom, showing that buyers are stepping in, and that neutral candle, inside candle now. So rejecting 75. So that 75, 76 is a demand zone of buyers right now. See what happens. That might be the opportunity for Sunday, Monday to reload bullish positions. Maybe. And look at the other commodity, gold. Giving anybody gold for the holidays? Gold futures. Weekly, the trend is up, even though we closed red at a higher high, higher low. But the bad thing is we closed back inside the range of that big candle, big green candle. But still, trend is still up, higher highs, higher lows. And we know it's inside that supply zone where sellers were, that red area. But still breaking through there, chopping into that. So maybe you want to go higher, maybe even to that 1900 level. Interesting. Okay, on the daily, look at that consolidation phase, just a little bit above 1800, 1879.50. So I drew a fib also because that consolidation had a lot of selling in here, and Friday closed below 1850. Big round number. Yep. So that's the bottom of that consolidation phase. So if it continues doing a retracement I'm looking at these fib knob levels, possibly targets of opportunity to reload bullish positions. Let's see what happens when it comes down there. And intraday here on the 4-hour. Let's make sure I definitely got the right one loaded. Yep, I do. Again, Friday, last 4-hour. Inside candle. And that huge candle that closed here, that red one. Interesting, that till. Yep. Into that green demand zone right there. Interesting. So these are the opportunities on the futures we're looking at to see what occurs for the new week trading opportunities starting tonight.